Trading tips for everyone and anyone every Tuesday, 10 a.m. UTC by Fluffy and Alex. The story behind the massive collapse of FTX exchange that plunged all the crypto markets into the abyss keeps getting more and more interesting, insane and disturbing. A lot of VC firms, hedge funds and exchanges might have been secretly affected. Today, we're gonna see some recent updates on this story and what risks to avoid, and of course technical analysis and some important news on Bitcoin, XRP, Ethereum and our favorite Cardano. We need to be aware of some great buy zones that might reach interesting levels. So let's see what is happening with FTX that destroyed all crypto pumps, right? When the stock market actually proceeded for a good pump and the dollar collapsed.
Pretty sure we will see a movie out of all of this at some point in the future.
I'm going to be the protagonist.
Now, last week, after CEO of Binance revealed the intention of selling some remaining $500 million FTT tokens by FTX exchange couldn't manage the pressure of a bank run, and it became evident it was in big trouble and collapsed, filing for bankruptcy, although at the start they were saying that all is fine. Look, Binance wanted to help at the beginning, which pumped the industry a bit, but after looking at FTX's balance sheet, they announced that FTX had huge problems and it decided to withdraw the bid. And right after all these strange and insane revelations, and things started coming to light. Allegedly a hack happened and mysteriously $662 million were withdrawn from FTX. Then we learned that FTX actually had built a backdoor in its accounting software by CEO Sam with the intention to move billions without the other staff members noticing. And right when no one could withdraw their funds, accounts that were located in Bahamas could actually withdraw with no problem. Rumors of bribing FTX staff members to be able to withdraw, some other schemes laundering locked funds through FTX NFT marketplace came to light. The crazy part here is that FTX lied that they had to let all the accounts in FTX Bahamas to withdraw because a regulatory order existed there, only to have the Bahama regulators to say that FTX was lying.
LOL. I think we should all move to Bahamas now.
They are actually facing criminal charges already in Bahamas. And things got worse. Allegedly, Sam transferred $10 billion to his trading firm Alamenda, and guess what? 1.7 billion of those funds vanished.
I didn't expect that from Sam.
Poof, gone, like magic. Alameda actually tries as we speak to change jurisdictions and relocate to Dubai, a country that doesn't have extradition treaty with US.
Yeah.
All those activities and customer funds Sam was sending to Alameda for investing and trading purposes, where things actually went not as he hoped he would, right?
Yeah, or he hoped it would.
And if you're not shocked yet, then learn that FTT token actually had a function that it could be created from thin air and inflate the supply on purpose. $380 million were created just recently. Now, another very disturbing fact is that FTX had $1.4 billion in BTC liabilities, but they had zero real Bitcoin as assets. So basically, they used paper Bitcoin to conduct business and used it to absorb buying pressure from real BTC, inflating the supply of Bitcoin, all because people trusted them.
That's magic sum.
Basically, FTX was running a fractional reserve system no different from common banks, which means, guys, that the wrapped Bitcoin on Solana doesn't exist. Solana and its DeFi network will have to absorb that multi-million dollars loss.
At this point, it is worth mentioning that what FTX did with SOBTC is essentially counterfeiting and is an indicator that we should be avoiding when possible wrapped coins or perform due diligence and research the token before buying in. More specifically, check as a minimum requirement the source code if it has been audited.
Interesting. Among all this chaos, CZ of Binance came to remind us that if it's not your keys, it's not your coins, and you can see how important it is to keep your own Bitcoin in your own wallets. And if you guys want to safely store your crypto and support our channel, you can do so by purchasing a ledger using our affiliate link that you can find in the description down below. Today, CZ announced an industry recovery fund to help all the legit projects that have liquidity issues from this situation with FTX markets actually pumped a little. But although those are good news, it only means that there are a lot of projects having troubles. For example, Sukoa Capital have lost $214 million. Genesis Trading has $175 million locked in an FTX trading account. BlockFi, after being saved by FTX from the Terra Luna fiasco, now has to go under as well and post all withdrawals. Huobi Exchange allegedly has some customer funds in FTX, don't ask me why. And the recent kid on the block, Crypto.com, a few days ago Crypto.com sent $400 million in ETH to the wrong address.
Open quote, close quote.
And if that is pretty irresponsible, then we learned that Crypto.com had sent $1 billion to FTX, which according to the CEO, it was recovered before the collapse of FTX. But as was natural, people preferred not to take additional risk and just wanted to withdraw what they have on FTX. And the bank run is on the process, which means if Crypto.com is solvent and liquid, it should have no problems with this at this point, as the CEO claims that assets are backed one-to-one and a proof of reserve audit is coming. So, for
time will show.
Time will show, but keep your crypto in your own wallets, guys, and just leave there what you need to trade on the exchanges.
Yeah, take care, be careful and cautious.
Now let's take a look at some important dates this week. Tuesday 15th of November, PPI numbers coming out. Those are a measure of wholesale inflation. Wednesday 16th of November, US retail sales data is coming out. And on Friday 18th of the month, home sales data is also coming out. And not to mention that throughout the week, 10 Fed members will be having press conferences. So a lot of key points and future plans might come into light.
Exactly.
If you guys want to know more macroeconomic news and what you missed in the previous trading tips episode, then just click at the suggest video at the right top corner. Let's take a look at the traditional markets and where we are headed. As with the release of lower than expected CPI inflation numbers, we saw stocks pump around 7%. Too bad FTX blew up the crypto market and everything went down, talking about a huge opportunity to pump. Anyways, the thing is that if the next CPI numbers come hotter than all the narrative about CPI being lower, would collapse. So the Fed might not change policy and everything could crumble back lower.
Again, for one more time.
Again.
We're bored of this bear market. It's boring.
S&P 500 pump and create a fair value gap around 3,900, which we will feel on the daily in the near future, I believe. Although we might still go to 4,100 to feel the fair value gap that exists around there, the green boxes, guys. But after that, I see stocks reversing back down, going for new lows. So stay safe out there. DXY, the US dollar index, at last broke the orange bottom trend line everyone was waiting for and created a fair value gap, which we will feel at some point. Maybe we will have a small bounce before continuing down. Main target for now is the moving average of 50 weeks, the green line, and the bottom weekly black trend line. Both are located between 102 and 104, so markets might have some pumps left in them. The true test will be around there. Either the dollar is weakening significantly and breaks that area, or bounces higher from there to choke all the markets.
Interesting.
Moving on to Bitcoin. Most significantly, we see miners keep selling, and at this point they are officially not making money when mining Bitcoin. So more selling will probably occur.
Interesting.
But this is the time when we see big companies grabbing the opportunity and enter the mining industry, such as Shell.
That's very interesting news.
And although most Bitcoin miners have troubles, Canaan miner scales operations despite of low earnings.
They must know something.
Maybe.
Or they must have a lot of funds.
Exactly. Exchange outflows have hit historic highs as investors withdraw from exchanges to hold their own crypto by themselves. And signs of huge accumulation occur in addresses that hold more than 10k BTC each, although same is not happening in addresses holding less than 10k BTC.
It smells like a whale accumulation here.
Now let's take a look at our Bitcoin technical analysis to understand what to expect. We actually nailed a lot of recent Bitcoin moves. Just check our previous episode, guys.
Episodes.
On the monthly, as we can see, we are moving straight down towards the next support after losing 19.7k last week. Zoom in and we will see the area Bitcoin is headed lies between 8.5k and 13.7k, where it will up is not sure, but 13.7k is actually the highest monthly candle close from 2017 bull run, and this level has been respected in the past. Around 11k we can see other monthly candle closes from mini bull runs in 2019, and this level was respected again in the end of 2020. And the last one and the strongest will be the historic black trend line, which originates since 2017, so 8.5k could be tested as well. And as things unfold right now, it is a possibility. All depends on when the stock market going to crash and what price Bitcoin is at that time. But as there is a fair value gap around 12 and 14k, I would say that this is where we potentially could stop and form at least a local bottom, if not a macro bottom. If we unzoom, Bitcoin could potentially be moving in a falling wedge formation as seen by the black dotted lines that usually breaks up, and the lower dotted black trend line of this formation is around 12,000 at this point. So going down there and bouncing back up towards the upper dotted trend line is a good possibility. On the daily, Bitcoin crashed, as we mentioned. It had formed a hidden bearish divergence as seen by the orange lines. So now where do we stand? The previous low of the previous range was at 70.6k, so now Bitcoin has flipped it to resistance, and this doesn't look good as it confirms bearish continuation. If we could claim this level back, then the real test will occur at around 19k, which if we get to see this level, I most likely would be building a short position. Although already seeing weakness at 70.6k, it would be a sign to short right from there. There is a fair value gap at 20,000, which we will feel at some point, so it might even be now to test this breakdown. Now, although this is how it could go down, test 20,000 and then down, personally I'm skeptical. I believe we might even reject from below 70.6 to go lower sooner than expected. On the 4-hour, Bitcoin is moving in a symmetrical triangle or potentially in a bearish pennant, which usually breaks down, and the target would be around 11k. So yeah, I think we might even break down from this pennant and nuke further. If we get closer to 17.6, I will be looking to short. If I'm wrong, then definitely will short at around 19,000. Now let's move on. Recently there were some disturbing news that could affect XRP. To be honest, not only XRP but all the proof of stake projects, even Ethereum.
Interesting.
As LBRY crypto project announced that they lost the case against SEC, and the token is a security probably now, which creates a dangerous precedent for all crypto of this type.
Exactly.
But XRP warriors claim that each case is not the same, and Ripple against SEC will not be affected. They mentioned that one reason that it's not the same is that LBRY judge was following the SG case and was basing decision on this case completely, which is different from SEC case. And the Ripple judge is following a different case altogether.
I think time will show.
Also, they say that the case SEC won was in different circuits, which have different applicable laws, and that the reasoning in that case was flawed. So no need to panic just yet, guys, but it is definitely something to keep an eye on.
It's not a good indicator, generally speaking.
Exactly. Now, let's go to technical analysis and see what's on XRP. On the daily chart, XRP broke that descending triangle it was moving in, and the target down, as we have stated in previous episodes, is around that bottom historic orange trend line, which is located at 25.30 cents. So we probably have more downside. We did create a fair value gap around 41-44 cents, which we will feel, and this probably will depend on Bitcoin, as every crypto moves more or less following Bitcoin right now. So we might break down right here or pump a little towards 38. Around 38 I would be looking to short. On the 4-hour chart we can see XRP is moving in a similar pattern to Bitcoin, a symmetrical triangle or a bearish pennant, and the target going down would be around 15 cents. If the strong historic orange trend line doesn't hold, 15 cents is the level to watch. Moving on to Ethereum. On the monthly, Ethereum is right on the moving average of 50 months, the green line, and everything points out that we probably will lose it as support, especially if Bitcoin nukes. We can see that around 1000 is a strong level and the monthly candle close of the 2017 bull run, but going down this level might not hold. So if we actually lose those strong levels, the next possible stop, which I would look to long and buy some Ethereum, would be around 680 to 750. It is a level that has acted as support and resistance in the past, but of course the strongest levels are even lower, which of course no one would believe we would see, as Ethereum seemed to be doing well with the proof of stake upgrade.
Interesting.
But nonetheless, around $400 is the level that has acted as a strong resistance support since 2017, and a bit lower there is the historic black trend line, which sits at around $300. Don't know guys if we get this low, but for now $700 would look like a good buy to me. On the daily we can see that 1.2k has acted as a strong resistance support several times, and at this point we are struggling to maintain it as support. Also we broke the bottom dotted black trend line and also flipped it to resistance. So of course, if we get 1.3 or even 1.4, it would be a good opportunity to short. That's if we get there and don't nuke down from here.
Interesting.
Lastly to mention Cardano. Cardano on the monthly is already at its historic support as seen by the black trend line. And this trend line is around 32 cents, which is actually a level that has acted as a level of struggle for price in 2018. So basically if we lose this level, 15 cents is almost a guarantee, as there is no support between 30 and 15. 15 cents is also a very strong historic support since 2018. Cardano being already on this level doesn't look good, as if Bitcoin goes lower, it will push Cardano below this level, but for now, on the daily we can see a bullish divergence, as seen by the black line. So being on a historic support, combined with this divergence here, makes me lean towards longing, with a stop loss below 30 cents. We most likely will pump towards 38 cents or maybe even towards 41. 38 cents is a good possibility, as there is a small fair value gap on the 4-hour chart. But flip 30 cents to resistance and I quickly will flip to shorting Cardano towards 15 cents.
Sounds like a massacre, Alex.
Yeah.
The crypto was nuked.
The chart doesn't look good for Cardano, but it is on a strong support right now.
Okay, that's it for today, guys. Thank you for watching. If you liked the episode and want to support us, then please like, subscribe, and share with your friends. Thank you. Bye-bye.
Bye-bye.
Till next time.
Till next time.
They call me a god.